Hey guys, so we're back again with Ask a CPA. So I'm Russell Wallace, and I'm here with my good buddy Brett Phillips. We're here to answer all of your dying questions of taxes and finance, and how do you get around the IRS and all of that good stuff. But before we get started, Brett, how have you been doing, my friend?
Doing great, Russell. Good to see you, buddy. Things are good, man. Kids are out of school, so we're getting ready for summer trips.
Yeah.
Been busy at work, things are going well. The firm is doing good. We're hiring a bunch of new people and onboarding them, which is always fun, and getting ready to do mid-year reviews. You
Mid-year
guys do that
reviews.
with your team?
Man, so here's a kind of a dirty little secret here. I don't like reviews at all.
No?
I'm just not very good at them. Like the whole documentation part. I know as a CPA, I should be like excellent at all things admin,
Yeah.
but I'm just not very good at them. And I do a good job. I think hey, let's go out to lunch. Let's go out to coffee, like some one-on-one time outside of the office. Let's have some conversations about some real things and that kind of stuff. And that's kind of a review, but it's just not very formalized.
Hmm.
I hate paperwork, which is, it's kind of odd for a tax accountant to say, but
Yeah.
I do hate paperwork.
I
And
think
so
it's
I don't do
important.
that.
I mean, I hate doing it as well, but I think people like to get the feedback. They want to know kind of where they stand, what their next goals are, like what they need to do to get to the next level, and kind of where we see
Mhm.
them in the organization. So I think it's important, but yeah, I'm with you. I don't like uncomfortable conversations. I don't like giving feedback, good or bad. I really don't like giving bad feedback. I'm not great at doing that.
Yeah.
I try to do it in the moment. I try to, like, if someone does something that I don't like or that I feel like they can learn from, I try to do it in the moment. But then you have all the emotions going on too, especially if they like got you worked up about something. So it's important to like take a second, calm down, like, reflect, be like
Yeah.
how big of an issue is this? How should I deal with this? And then I like to call them in my office separately and deal with it immediately. But still, it's difficult. It's difficult to be a leader of a team and to manage people and to do it the right way. I mean, everybody all want to do it the right way. We want our team to be successful and be with us for a long time and grow together. I mean, everybody on my team, I want them to eventually become a partner. And how do you express that? How do you make that make it's difficult. I don't know.
Yeah.
I
Yeah.
think a lot
They're
of
definitely
communication helps.
Yeah, absolutely. And they're definitely like the right ways to do reviews and the wrong ways. And so reviews can be really good and positive, like kind of what you're talking about, right? Making sure that people understand what they need to do to get to the next level and kind of the good things that they're doing, like what do they need to really lean into to get better at. Those kinds of things. And then the wrong way, of course, is the whole like I hear it's kind of like the CYA review. Like I'm kind of building up this paper file so I can then fire you and like kind of clean my hands of it, that sort of thing. Like that's
Yeah.
so it gets kind of this kind of negative connotation. As long as you're doing them in the right way, I think it's great and a good tool to use to kind of build the team, and improve their leadership and how they're working with each other and those kinds of things. And a lot of times as a manager, you get to see things from a different perspective and you kind of outside of the situation, right? So you see how everybody's kind of interacting on the team. And so you can kind of provide a kind of a different perspective as somebody who's not maybe in the middle of all of the day-to-day stuff all the time. So it's good and valuable feedback. I should do it more often. I should be more systematic about it. But it is the big shortcoming I have from kind of a leader standpoint for sure.
Yeah. So we try to do them twice a year. Sometimes we miss one if things are going haywire or, for whatever reason. But yeah, we've already got them scheduled. They're going on next week. So we're getting them done. But speaking of like management and getting kind of tossed into management, I had coffee with a guy this past week who does management training he does them for government workers, does them for private companies. But when you promote somebody to a management position, oftentimes you're promoting them because they're doing good at their job, at their technical expertise, they're doing a good job. And then you promote them, you say, okay, great. Now manage all these other people doing the same, teach them how to do what you were just doing, and now you're a manager, like go do it. You don't give them any training. I'm never been given any training, never
Mm-hmm.
told, how to manage people, how to, meet their expectations or train people, or, you just kind of will do what the person above you was doing. Now you're that person. You do what they did, right? So the person you were answering to is now you. So do what they did and figure it out. This guy goes in and kind of sets up, strategic, like a 10-point system of this, they have all this, they've thought a lot
Yeah.
about this, and they've kind of put a system in place of how to train somebody to be like move up to that manager level. And it's really interesting. And it really got me thinking, like, geez, we really got to train our people better. And, when we promote somebody, we need to like take them out a few times and kind of walk them through. This is how you manage people. This is how you train people. This is, you know, don't just do what you liked to be done when you were, underneath
Mm-hmm.
somebody. Now that you're a manager, you're now responsible for certain things, and you're now part of the committee of people that's in charge of the management committee. So now you have to kind of change the way that you talk to people and think about it from a management perspective versus a staff or senior whatever, however the organization is structured. So
Yeah.
super interesting, really interesting guy. I'll shoot you an introduction to him. I think you'd really like to
Yeah.
kind of pick his
Absolutely.
brain. And he's a good golfer too.
Yeah. Yeah.
Which
Well,
is great.
it's just, you don't have to be that great to be better than me, but that's always nice to it's always nice to go to meet people who like to play golf.
Yeah.
Well, what people may not know about Brett is that he reads a ton. So he reads
do,
a bunch of these books, and he's always got a good recommendation for me. So I always enjoy that.
So here's the latest book I just started called
What's this
Buy
one?
Back Your Time. He's
Yeah.
read this one?
No, I haven't
No?
even heard of it.
Yeah, this is Dan Martell. He's written a couple other really good books, and yeah, this one's supposed to be great. It was highly recommended. So
Buy Back Your Time.
Buy Back Your Time. It's kind of the management role of now that you're a business owner, you kind of have to do things that only make sense from a financial perspective. Don't take
Yeah.
every meeting. Don't do things that aren't going to move the needle significantly. Try to buy back your time.
Interesting.
Yeah. Should be good. Just getting into it. So
Well, let me know how it is. If it's worth reading, let me know.
you
I always
got
like
it.
for somebody else to read it first, right? Like, hey, is this worth reading? Yeah, great, fantastic. Now I'll go read it.
Yeah, it came highly recommended, so I'm hoping that
Yeah.
it's good.
Good.
But we'll see.
Good.
Yeah.
Well, you ready to dive in here to some questions?
Bro, I'm so ready. We got some really good questions today. Man, we've had so many people submit questions, and they're great. I mean, some are more like emotional, like how do I deal with this relationship, and some are like very technical. Can I deduct
Yeah.
certain expenses, which are great as well. I like them both, and yeah, these are a couple great ones. So we just picked these out. And the first one is from George from Miami, Florida. George says, I'm going on a trip to Tulum with some friends.
Nice.
This is right around your corner. You love Mexico. You're down there all the time. And George says, and one of my friends told me that if I talk about business while I'm on my trip, I could write off the whole trip and it's all tax deductible. He says, I own a small creative agency. Is this true, or is this just TikTok nonsense? What do you think,
Well, it's
Russell?
creative, that's for sure. So
Yeah.
some creative tax planning there for sure. Well, no, Tulum's a great spot. So anybody who hasn't been, it's fantastic. That whole area. So you got Cancun, Playa del Carmen, Cozumel, and then Tulum to the south. Tulum's a great spot. Lots of natural stuff going on. The rainforest and cenotes and everything else. Diving's great, but
Golf course. What's that golf course?
Mayakoba, yeah. So we went down and played there before.
Yeah, we did.
It's
It's
a good spot.
fantastic. Great spot.
Yeah, it's the
Bring
live
your-
tournament spot, and when they come down to Mexico. So if you're into the live golf folks, they play down there. It's kind of
They
cool.
have a PGA tour event down there too, don't they?
Yeah, I think so. I think they've played down there before. I don't think it's every year, but I think they've played down there
Okay.
before as well. Yeah.
Yeah.
It's kind of cool. You go in, they got all the golfers up on the wall. Anyway, we're totally getting off subject here. So
Let's talk more about golf.
yeah, let's talk more about golf. But yeah, so you're going on a trip and you talk about a little business. Is it tax deductible? You own a creative agency, right? So, the way the question's expressed, TikTok nonsense for sure, for sure. But let's talk about maybe how do we make this tax deductible? How are trips tax deductible? Because sometimes trips can be tax deductible and business can be fun, right? It doesn't have to be, a stale office building in Detroit, to be tax deductible. That doesn't have to be the only business trip you can do that's tax deductible. It could be a really cool trip.
Nobody's vacationing in Detroit.
No, I don't think anybody vacations there, but I'm sure it's a cool spot. I'm sure there's cool spots in every city, but
There are.
no one's vacationing there. That's for sure. So how do you make this tax deductible? Well, one, it can't be a vacation, right? So there has to be a profit motive. We've talked about this a few times on the podcast. This is the way I explain it to clients. There's some technical stuff that we can go into if we want to, but I like to boil it down as, is there a profit motive attached to this? You're in Tulum. Is there a profit motive attached specifically to your trip to Tulum? If there is, then let's talk some more about it. If not, then that's an immediate no. Let's say that you have a creative agency, but you also have a travel blog that you're getting off the ground, and that's leading into maybe some travel agency work. So now we have a separate business. Now I have to be careful to avoid some of the hobby rules around that. But if we have a legitimate business, we're trying to make some money at it. It's, not every business has to do $1 million in revenue, right? So you can have a business that's kind of a smaller business. Again, we got to avoid the hobby rules. That's the key. We can't make this a hobby. But if you have a real profit motive associated with, doing kind of travel influencer work and maybe travel agency work as well, you set up some agreements with some of the large resort chains and those kinds of things, and you kind of make this a consistent part of your life, that sure, you're going to materially participate, so you're going to spend 500 hours or more doing this. That's a big hurdle that you want to make sure that you get over. And absolutely, this is a real business. I actually have a friend who did this and did a travel blog for about 5 years, kind of built up a following doing that, and parlayed that into becoming a travel agent and setting up, getting kind of the certifications and getting registered with these different resort industries and things like that. And him and his wife, they get invited to go to places. They blog about it. They take videos, and then they try to sell vacations to these resorts. And they make, they started off making nothing, and then slowly over time, they've built up more and more of a following. So they make a little bit of money off their videos. They make a little bit of money off of the vacations that they sell. And, it's a legitimate bona fide business. And in that case, traveling to places like Tulum can be a business expense. When you say creative agency here, George, when you're talking about, if your main role in this creative agency is, doing like graphic design on Canva or something, right? Or photo Adobe product, right? Like being at Tulum's not really a thing for you. But, if we could set up a separate business, it doesn't have to be an LLC. You don't have to register all of these things. You can just be a business, right? Without having to do a lot of this other administrative work, then absolutely. Absolutely. I think you can do it. We just have to be careful, again, one, about the hobby rules, and two, let's really make sure there's a real profit motive here, especially if you're going to have a bunch of losses. We want to make sure that it's a real bona fide business. But, if we can structure it that way, then sure, we can go to some cool places and write that off. What about you, Brett? Have you ever had this question before?
Yes, all the time. And I think that there what I tell clients is there needs to be a business reason to go on the trip. Like if you're just going on vacation with your buddies and you talk about business, like no, that's not tax deductible. But if you're going down for a conference, if you're going down for if you're a real estate investor and you're going to look at real estate, there's a reason for the trip, then yeah, I think we can get there. But there needs to be a reason for it. There can't just be like, hey, we're going to go on vacation together and talk about business that we could talk about here because we're next door neighbors. We can go to the coffee shop and talk about business, but instead we're going to go to Mexico at this resort and talk about it on the beach for 7 days. Like, nah, yeah, that doesn't pass the sniff test. And I think you gotta be careful with these things. And the IRS likes to audit these, even if you're a small business. If you think that hey, it doesn't matter, I only do $1 million in revenue, or $500,000 in revenue, or $5,000 in revenue. The IRS doesn't care. They'll come in and look at this and say that's
No bueno.
BS. Yeah.
Yeah.
That's no bueno. And not only will you get popped for taking a deduction, it could be fraudulent. I mean, if there's no business reason for you to go down there and you're just trying to expense your vacation, I mean that's it's questionable at best.
It's a tough
It's
sell
fraudulent.
for sure.
It could potentially be fraudulent, which is
Yeah.
not good. You could get you in a lot of trouble. Just ask Wesley Snipes or some of these other guys who try to do some crazy tax moves and
Yeah.
end up getting made an example of.
Got a little too creative, that's for sure. But this is why you see the CE credits or continuing education stuff set up in cool spots, right? Vegas has a ton of conferences all the time.
Yeah.
Places like Miami have conferences, Orlando, around the Disney spaces there. You have conferences in New York a lot. There's a lot of desirable places to visit that have these conferences. Denver's got a lot of conferences. In the dental world, I've got a lot of dental clients, and apparently there's an implant course they do in the Dominican Republic. I mean, so it's right on the beach. Like everybody stays at a place on the beach, but they're doing dentistry. They're learning implants on cadavers and stuff. I mean, they're doing like real work, real learning, real training. It's just that when they're not doing that, they're hanging out with a pina colada in their hand. And there's nothing wrong with that, right? So you do training all day. That's fine. What you do at night with a pina colada, that's totally fine. But you just got to make sure that there's a real reason for it. The other part of this is spouses coming along and things like that. So, if your spouse comes along or your partner comes with you, then you got to make sure that you're not expensing their travel.
Right.
And if you stay extra days, now we got to kind of split this trip expenses up, right? So if you got 4 days of business and 3 days of personal, right, we need kind of this, 65-35 split on a lot of these expenses. And like the hotel stay for those extra 3 days, like that's not business expensable and those kinds of things. And so tracking this stuff is key. What I tell clients a lot is that just like if you have a mileage log, if you're going to do kind of the split travel stuff, like write this stuff down, like just type a quick document in Word or send yourself a quick email and then save that to PDF for the file, or send it to me and I print it to PDF and put it in the file. That way we've got, if we ever do get audited, that way we've got something to substantiate the business portion of it.
Yeah. Yeah, that's a great point. I mean, I just signed up for a conference in Vegas. It's put on by QuickBooks. It's like a big Evolve. But, there's 4 days of training every day. It's like 9 to 5. I mean, it's like a full day of training. So I'm not sitting on the beach all day and be like, hey, you like business? Like, yeah, I like business. All right, let's write this thing off.
Yeah.
There has to be more to it than, just talking shop with your buddy while you're on vacation. So absolutely. Nice try, George. I don't think that's a winner, but talk to your CPA.
Talk to your CPA before you go and plan this stuff. Like, talk to your CPA and ask him the question, like, hey, I want to do a business trip. I want to do something kind of cool. I want it to be expensible. Like, what do I need to do? And like, talk through it first before you plan the trip. Like, don't come after the fact to be like, hey, we happen to talk about business for like in between pina coladas. That's like totally deductible.
Right.
No, I mean, we got to do some more work than that to make it deductible.
The IRS looks at the facts and circumstances, your documentation, your substantiation of these expenses.
Yeah.
So every expense that you have needs to be substantiated, and there needs to be good facts and circumstances around it, whether it be, a lunch or, a trip to Mexico. You need to have good facts and circumstances to support and substantiate that deduction. If you don't, then potentially, if you were to get audited, the IRS could say, no bueno, no senor.
Yeah.
Sorry, it's not good.
And you better believe if they're looking at the travel expense account. If you got a big bucket of money in your travel account, your entertainment account, your meals account, I mean, these are things the IRS is going to be looking at line by line.
Yeah, exactly.
They're not dumb. They're not dumb.
Right.
Well, we got another question here from Marcus in Atlanta. So Marcus says,
where the players play.
That's it. That's it. So Marcus in Atlanta says, I started a landscaping business with my best friend, and now he wants out and thinks he is entitled to half of the business. So we never set up a formal partnership agreement. What should I do? And what are the tax implications if I buy him out? So what say you, Brett? Like, Marcus, is he in a big pile of trouble here, or what's he got to do?
Yeah, he's in a big pile of mess here. It's a tough situation to be in. There's a couple things you can do. I mean, you're in, let's see, does he say he's structured any particular way?
He didn't.
No. So if you don't set anything up formally, an LLC or anything else, you're probably just in a general partnership, and you guys are probably 50-50 partners. If no other ownership structure is agreed upon beforehand, you would just be allocated your share. So yeah, you'd have to put a value on the company and potentially buy him out. It doesn't mean that, this is required that you get a valuation done and you have to pay whatever that value is. You could tell him, hey, I'll give you $1,000 and that's all I'm willing to give you, or I'll give you, whatever amount. You could just say, this is what I'm willing to buy, and if you're not willing to take it, then we'll continue on and be partners. Or you can try to sell it to somebody else, but you really need to formalize this agreement. This is why it's such a bad idea to go into business without having a formal agreement in place. And don't think that we're like coming down on you, Marcus, because we see this with law firms. Their job is to write up operating agreements, and they don't have operating agreements in place. It happens all the time. So don't feel bad that you don't have an operating agreement in place. I mean, a lot of times you just kind of, start working, and if it makes money, awesome, let's keep doing it. If not, then all right, we tried and it didn't work, and whatever, we'll move on. That's what entrepreneurs do. And you don't say, okay, how are we going to allocate this portion of income upon agreement of us going into business together. That's typically not how businesses start. It's hey, I got an idea, let's try to see if we can make some money. And then by the time, you probably should have an operating agreement in place, you're so busy working and making money and being productive, you're like, whatever, we'll worry about that later. And it doesn't become a problem until either you stop making money or one of the partners gets upset and wants to leave the partnership for whatever reason. So yeah, I always recommend setting it up properly in the first place. But if you don't, then yeah, I think you need to put a value on the company, and whether that ends up being, you can discount it, or he could say it's worth more for whatever reasons. It has legs. It can get much bigger. This company should be worth, X what seller's discretionary earnings is, or you could argue, hey, it should be worth, next to nothing because there's no assets. There's arguments on either side, and you guys are going to have to come to an agreement as to what you feel is a fair price to exit him out at. I would do it. I'd buy him out and make him happy, and I would document that buyout. I would have an attorney write that up so he is no longer, has any rights to the business, and then I would blow it up and make it big. I had a client that did this with a business. They all four came in when they first were starting the business. There were two couples, and they were like, "We want to start this business together. We're gonna do it." And they got started, and they actually were doing pretty well. But one couple was like, "I don't know. I don't think we want to do this," and they just exited. And they gave up their rights to the business. They said, "Hey, we don't want to do this anymore. We're gonna go back to our 9 to 5. We don't like being entrepreneurs. We're gonna get out." And the couple that stayed, they've been clients of mine for almost 10 years, and they're killing it. And every time I talk with them, it's like, man, I can't believe that these people exited on like year one, 6 months in. Things started getting a little rocky, and they were like, we're out. Everything was going in the right direction. Like, the business was doing well, cash flowing, everything was good, but they didn't feel secure enough. Like, they needed that 9 to 5 security. They weren't true entrepreneurs, and they exited way too early, and now it's does a lot of does big business. It's a good, strong business. So what do you think, Russell? How do you deal with issues like this? It's It's a tough one, and there's not a straight answer.
Yeah, it's tough because you have to navigate all of the emotional complexities, right? So from a financial standpoint, it's pretty simple, right? So let's value the business and then let's figure out like what you're willing to pay the other person to go away, right? Because you can sue, they could sue you. Like there's a lot of other things. So it's better to figure out a way to make them go away, right? Go away. And you could do that through some sort of mediation service, or even just an attorney that doesn't necessarily represent both of you can kind of like work out kind of a quick sell agreement that releases the equity and make sure that they like release all the equity and they don't want anything to do with it anymore, that sort of thing. And so there's ways to figure this out, but it's better to figure it out and not just kind of, put your head in the sand for sure. Because that's definitely going to blow up on you. But it is, of course, this is a great lesson for why to get the operating agreement in place in the beginning. But if you don't do that, then I think the next best thing to do is to get a valuation done. It can be a light valuation. It doesn't have to be kind of a full-blown report and all that stuff. So it's something that costs you about $1,000, $1,500 as long as your books are in order. Get a good valuation done so you get kind of a third party independent person to say, look, this is the value of this. And then you go to that other person and say, look, you helped build this business. You want out, that's fine, or whatever. I'm going to buy you out, that sort of thing, and kind of work on it that way, and kind of come to terms with that other person. That's always going to be your best bet. When you start talking about the tax implications of that, if you're buying that other person's equity, they're going to have long-term capital gains when they do that. So you got to kind of take that into consideration. That might be kind of a big selling point. Hey, I'm going to buy you out, and it's just long-term capital gains, right? So it's just 15% for the equity that you own in the business, and so it's a lower tax rate than your, ordinary tax and all that stuff. There's no payroll tax on it, those kinds of things. And so if we're not talking about a big business here, you don't have the net investment income tax, or any of those kind of things either. You got to kind of, hey, it's just going to cost you 15% taxes. It's kind of a steal. We'll structure it this way, trying to help you out, that sort of thing, and buy them out. And then as soon as you do, right, you'd never want another partner without papering this up first, right? That's the key, right? So make a mistake once, but definitely don't do it again. But y'all started the business together. I'm sure they did something here, so it's going to be the right thing to do to make sure and come to some sort of conclusion where they're kind of formally bought out. It's going to help protect you against any future claims. If you go and you blow this business up and you never buy them out, then they're going to come back with a claim and say, hey, like I still own half of this business. And, you're going to get in a big lawsuit and it's just going to cost a lot more money at that point. So it's better to take care of this now before you blow the business up.
Right. Totally agree. Yeah, it's a tough spot. But yeah, you need to have that hard conversation and close it out. Yep.
Yeah. Well, this has been a good episode. I like these questions.
Yeah, they're great. I mean, yeah, some are, more technical and others are more relationships, but yeah, I like them both. And yeah, it's kind of fun to see both sides of the coin and see what people are working through. So we appreciate y'all's questions. Go ahead and head over. If you have a similar question, head over to our website at askacpa.co, and we'd be happy to feature you in a future episode. Or if you want to keep it private, that's fine as well. We'd be happy to answer your questions. And or leave a comment. Leave a comment in our YouTube channel, and we'd be happy to respond. Cool. Well, thanks so much for watching, guys, and we'll see you in the next episode for Ask a CPA podcast.
That's it. Like and subscribe, and we'll see you next time.
That's right. Cool. See you, Russell.
See you, man.